Hey guys, can you listen to me? Can you hear me? I mean,
Yes, I can.
okay, perfect. I was just checking to see if my microphone worked. Okay, I'll wait for a few more people to enter the call and then I'll start.
Great.
You can see my screen also, right?
Yes, I can.
Okay, I might as well start since there's, let me see just how many, okay, it's only 5. Okay, anyway, let's begin. So the last time, basically, we discussed basic impulsive structures and corrective structures, ABC corrections, different types of corrections, so basically flats and zigzags. And I think we did a bit of fib levels. Just to be sure, you can hear me, right? Everyone?
Yes, I can hear you.
Yeah, sorry. Okay, so yeah, we did a bit of fib retracements, how to find targets. So today what I was going to do was discuss 1-2-1-2 waves, some fourth wave pullbacks, a bit of channeling techniques, and how to place stop losses on based on Elliott wave theory. Okay, so the first thing we'll do is 1-2-1-2 waves. So whenever you have a structure like this, so I'll clean the chart up a little bit. So say that you're trying to map out an impulse here, and like this was your original count, right? So you have a impulse 1-2 here, and then you're starting the 3-1, the 3 wave, but then wave 4 falls down here and breaks your rule. So it overlaps into the territory of wave 1. Then you know that the count is incorrect. So there are 2 possibilities here. The first is that this is an ABC correction, right? So you would expect price to go down afterwards, but that's not what happened. So 2 more possibilities. Now, either this entire ABC is a part of a larger W, and then we have an X wave here, and then this goes higher. It's not wrong, but I don't think it really makes sense with the current movement. And then the other possibility is that this is a 1-2-1-2 wave. Now, if you can determine 1-2-1-2 wave formations, they're like one of the most profitable Elliott wave formations you can see, because basically what a 1-2-1-2 formation means is that after the first 1-2, which is the blue wave here, then the next wave has extended. So basically you have first wave done, second wave done, and then when the third wave begins, you can tell it's an extended third wave because there is a 1-2 subwave formation which breached the top of the original wave 1. So since this cannot be a 1, 2, 3, 4 here because of the breach I discussed previously, it's probably a 1-2-1-2 formation. So this next movement, the one which is outlined with a red wave count, is the beginning of wave 3, and we can outline 5 subwaves for that one. And okay, yeah. So now stop loss placement. We're still assuming that this is the correct count, which it probably is. If so, we are in subwave 3 of a larger wave 3. Now, this is not a rule, but it often happens this way. If wave 3 has extended, in this case, the blue wave 3, then, okay, someone else joined, then often the third subwave in that wave also extends. So basically, if longer term wave 3 extends, subwave 3 inside that wave also extends. Yeah, so in this case, blue, then the subwave 3, which is red, also extends. So again, I would expect this to be the longest. Again, this is not a rule, but it often happens. Okay, now stop loss placement. If you caught the movement somewhere here, so let's say here, and you're trying to enter the trade in anticipation of a long, then yeah, obviously the place where you would need to place a stop loss would be right here, below the bottom of wave 1, because as the rules we discussed before, wave 2 cannot retrace more than of wave 1. So if this were to happen, it would invalidate the formation. So this low here is where you would place the stop loss. Also, I don't know if people do this, but yeah, so you can see right here with the L, which I put the arrow there, it shows you the exact value. So L is the lowest it has reached in this candlestick here. So this 4-hour candlestick. H is the highest because it has reached, O is the open and C is the close. So basically, in this case, the lowest value was 316.91. Yeah, that's it. You can place the now it doesn't matter if it's only a tick below that actual value, like it's still valid. Stop losses can be placed just literally 1 tick below the wave 1 low. Okay, someone else joined. Okay, now we have subwave 3. If you caught the move somewhere here, so here. Now, the other rule is that wave 4 cannot breach. Okay, more people are joining in into the territory of wave 1. So if you assume that this formation is correct, then, and you're longing from anywhere here, your stop loss should be placed right here. Now again, the high here is 394.6, so your high is so basically, if you're longing anywhere here, the stop loss should be 394.5 because this would invalidate this formation. Now, again, this will not invalidate the entire bullish formation, so it will not invalidate the blue one, but it will just invalidate the shorter term red one. Yeah, so it only would invalidate this one. Now, say that this actually transpires. So you have the 3 wave, you have wave 4, which comes somewhere here, and then you have wave 5. Then the new stop loss would have to be placed here. Now, this is one of the reasons why I prefer entering into wave 2s and placing a stop below the wave 1 rather than entering in wave 4 because in many cases, the stop loss will be far away from the bottom of wave 4. So if this actually transpires and then the price goes down here, say that you catch it somewhere here, right? Now, again, I'm assuming that this movement will actually continue. Right, and the price retraces all the way to the 0.5 fib. So a bit lower. Then, yeah, this would still be 11% loss, which is pretty big in my case. I wouldn't like that. While in the other case, if you had caught the move somewhere here and you're placing a stop below the low of wave 1, this would be a much lower 7% loss. And I'm not even catching the bottom. I'm just speaking like the average, because I think it would be easy to catch this. While in this case, I'm measuring from the 0.5, while it's also possible that the retracement will be more shallow and it will only retrace to the 0.382. So this would be a loss of 16%. Yeah, so basically, again, this is not a rule, but it often happens this way. Is often much bigger than so besides the fact that if you catch the bottom of wave 4, you only have one more wave to make profit. If you catch the bottom of wave 2, you will actually have 3 more waves. So waves 2, 3, and 4. The stop loss is also much higher in wave 4. Okay, I'll remove everything here. Now, the next thing which I want to do is fourth wave pullbacks and channeling techniques. It's actually similar. Okay, so this is a fourth wave pullback. Now, what a fourth wave pullback means is that, let me remove everything. If you draw a channel wave 1 and 2, wave 4 will often revisit the middle of that channel. Now, this is not a very commonly used technique. It's mostly used by Jeffrey Kennedy, this pretty good Elliott wave trader. There are lots of videos of him on YouTube. If you want text, I think I've shared his text several times in the premium group. So if you're there, I can just send them to you again. But yeah, so say that we have this formation. I think this is probably the correct one. Like we should be in a wave 5 here. Again, wave 3 has extended. You can clearly see right? Now this is the correct formation. Wave 3 is not the shortest. 4 doesn't breach the top of wave 1. So now let's do the fourth wave pullback. So if you draw a channel connecting these bottoms and the highs here, right? Now you can tell that okay, now actually you have to use the actual bottom, like the wick low here, and then the highs. So first of all, this is the breakout level. So here you know that this is probably an impulse, right? Now the resistance line of the channel was touched once here, just touched again here when the price broke out. Now, if you just extend this channel, you can do this by the extend right line or left line function on trading view. You can see the bottom of wave 4 was extremely close to the exact middle of the channel here. Now, why I like this type of formation? Because again, one of the rules which we discussed prior is that wave 4 cannot breach the top of wave 1. So this would be here, right? It's not breached by a tiny bit. Now, we caught the fourth wave here, right? Now it went slightly below the middle of the channel, but if I were trading this in real time, I would have placed, so say, an entry here, right at the channel at 241. The stop loss is only 3% below your entry price, right? And that's extremely manageable. Even if you do it with leverage, say that you do it with 3x leverage, that's still going to be less than a 10% loss. So if you manage to catch this, usually the stop losses are extremely close to your entry point. So you can have a very high risk to reward ratio in these types of formations. So yeah, remove them. Remove everything. So again, you had this. Whatever, fifth wave is going higher. You draw a channel connecting the bottom of waves 1 and 2. Again, I drew it incorrectly. And wave 4 comes right here. Now, another thing which also fits in with what we've been discussing is that corrective movement is often contained within two parallel lines. Again, you can use parallel channels a lot in Elliott wave theory because so this, it's not a perfect channel, but it's still a channel. Let's remove the extension. Okay, no, I think we can find a better example than this one. Maybe in lower time frames. So possibly this. So this here, this highlighted part here is most probably a corrective movement. And then you can tell by the breakout from the resistance line of this channel that a new impulse has begun, and it's actually the impulse that led us all the way up to here, to the 334 high. And yeah, you can even use that with this. So if I was assuming that this movement was actually a correction when it was an impulse, the moment the price broke out, then you know it's not a correction. So I was actually doing the same thing. Wait, let me just a second. Okay. I was actually doing the same thing with the current Bitcoin movement. Okay, so that's my count for Bitcoin. And yeah, initially I was assuming that this was a corrective movement. It really did look like a corrective movement. Especially here, wait, I'll remove the counts just for a second. At this moment here, like you had the rejection and the creation of a shooting star candlestick, very long upper wick, price decreases afterwards. returns to the middle of the channel. Like at this point, I was pretty sure that this is a correction, but then price broke out and now it's an impulse. So yeah, I think Bitcoin is impulsing higher. If that's the correct word, I'm not sure. So yeah, this is similar to the 1-2-1-2 formation I discussed prior, but it's not actually a 1-2-1-2 wave count, because in a 1-2-1-2 wave count, the second one has to go above the top of the first one, and then the second wave has to decrease inside the territory of the longer term wave one. So in a 1-2 wave count, the second wave one has to go higher than the first one. So again, even though this is not a 1-2-1-2 formation, it is still probably an extended third wave, but not as extended as it would have been with an actual 1-2-1-2 formation. Now, let's talk stop placement here. Now, whenever I use a fib retracement tool, I always use it only on the wave which is going to retrace. So in this case, I will not use a fib from down here, and neither will I use a fib from down here, but I will use it from here, because this is subwave 3, right? And this is the only movement which is currently correcting. Now, I put these three, the 0.382, the 0.5, and the 0.618 fib retracement tools, fib retracement levels, because they're the three most common, because this move here has already retraced, right? We have the big one up and the wave 2 down, 1, 2, and now we have subwave 3. Now we're expecting subwave 3 to retrace. If you remember the fourth wave pullback we discussed previously, if this were to retrace all the way, it would retrace. Now, depending how long it takes, it would either be at the 0.5 level or 0.618. Now, I really like to use confluence, right? So meaning when the price is retracing, I would expect the price to retrace to one of the common fib levels, but also have confluence with something else. So in this case, it's the middle of the channel here, or it can come to the top of the channel. So right now I would be looking at the 0.5 fib level to retrace. Now, another thing which has not already occurred, but it might eventually. Now, wave 4 is corrective, right? So obviously you would expect a corrective structure to develop there. So you have an A, B, C, something like this. Let me make it smaller. So say that wave A goes all the way here. Let me just clean this up just for a second. Now, when I project the length of wave A to wave B, if this also gives me a confluence with a fib target, so if this is exactly at the 0.5, it would be much more likely for the price to get there. Now, again, this is just hypothetical. I have no idea how long the wave A will be right now, or the wave B, but whenever they develop, you can do that in order to determine the bottom of wave 4. Now, okay, so I'll go to the premium group just a little and give you a sneak peek of it, because it didn't work the previous time. Okay, so here's the most recent signal. It's not given by me, it's given by Terranova, great trader. So yeah, basically the same, kind of the same thing. He expects wave 4 to retrace right now. The stop is placed above this wave 3 high, and the targets are actually it's a futures trade, so the targets aren't as high, as low as they could have been, but the previous signal, I think, had lower targets. Yeah, exactly. The previous signal had a take profit of 12,000, which would be slightly below the 0.382 fib level, which is a very, very common retracement level. Now, again, my most recent analysis. Now, here is a ZIL. Okay, yeah, let's do ZIL. Here it is. Okay, now, in the case of ZIL, I think it did an extremely textbook ABC formation. Now, again, that's an ABC wave. In this case, this was correct. So if you're trading this in real time, right, you take the length of wave A and you project it to the top of wave B, and it was extremely close to giving you the actual low. Now you have C waves transpired inside an impulse, right? So there's a 1, 2, 3, 4, 5 wave count down. Again, fourth wave. Let me just clean this up a little bit. Now this follows all the rules. Wave 4 did not breach at the top of wave 1. Wave 2 did not retrace more than 100% of wave 1. And wave 3 was not the shortest out of all the waves. So yeah, you had this 1, 2 here. The breakdown here shows you that this is not an impulse. Rather, it's not a correction. I mean, rather it's an impulse. And wave 4 retraced almost to the middle of the channel. I mean, not the actual low, but it touched the middle of the channel afterwards. And if you were trading this, it will stop at the top of wave 1. Now, this is still higher. It's a 13% stop, but the entire move had a 55%. So when you look at it this way, it's not that big. Now, in the case of ZIL, I think this is most likely the beginning of a new impulse. So this 102-day period was a corrective structure, and I believe that what followed here afterwards is the beginning of a new impulse. So yeah, is most likely this. So if you're trying to trade this, the stop would have to be placed. Wait, I'll just go to a lower time frame. The stop would have to be placed right here. So below the bottom of 0.01268, September 21. So yeah, again, this gives you the actual low. Okay. So now we'll try to map out the impulse. Let's just go to low time frames. This is what I have right now. I don't know if this is the correct formation or not. But now we have a 1, 2, 3, 4, 5. this breaks one of the rules. So wave 2 did not retrace more than 100% of wave 1. Wave 3 is not the shortest, but wave 4 breaches the top of wave 1. Now, again, this is a break. I'll write it down. Wave 4 cannot breach the top of wave 1 on it's a leading or ending diagonal. Now, leading or ending diagonals obviously either come in wave 1 or wave 5. There are two requirements that a leading or an ending diagonal should have. It's a wedge, so basically it's either an expanding or contracting wedge. In this case, it's an expanding wedge, as you can see here. Now, these aren't extremely common, so I'm not entirely confident in this count. I have mapped it out, but I'm not sure if this is the correct count. But yeah, you have 1, 2, 3, 4, 5 expanding wedge, price breaks down from wedge afterwards. What I have after the wedge breakdown is an ABC formation, which probably ended right here. Now this works better. You have 5 waves down, a corrective movement all the way up to the B, and a C wave bottom here. Now again, if you recall one of the previous sections, I said that corrective movements are often contained within parallel channels. Yeah, so in this case, we have a channel. No, never mind. This wasn't. It's likely that this could still be a correction, just because it's still in the channel. So the C wave did not end here. But in any case, if you're trading this, and again, I said before that it is probably here at the bottom of the C wave where the new impulse began. So if you're trading this, I mean the expanding diagonal that I outlined is probably the longer term wave 1. And now we are correcting inside wave 2, or we have already completed the correction. Let's see how much has the price retraced. I think this was shallow. Okay, so it was the 0.5. It was exactly the 0.5 level. Okay, so that's a picture perfect retracement, as you can see here. So yeah, bottom fits. It was exactly at the 0.55 level. Now, there are 2 ways to trade this. The first one would be assuming that this is the beginning of wave 3. So probably something like this, whatever. And in this case, the stop loss would have to be placed here, right here, so at the bottom of wave 1, at bottom of wave 2. Now, this has its pros and cons. Its pros are that the stop loss is, oh damn, it's still, the stop loss is about 13% below the price, which is, it's not that good. But the other way to trade this would be to assume that we are still in wave 2 or still correcting, and then we would have to place a stop loss at the bottom of wave 1, which would be here. Now, in this case, I don't think this is feasible, just because it's a 36% loss. So yeah, even though the potential profit it's still much higher, whatever, it's like 100%. It's still a very big loss to take. Like, I wouldn't be comfortable with giving someone a signal which has a stop loss of 30 something percent, because that can like liquidate you pretty easily. As for the targets, now, in order to find the target, you do an upside down of wave 1. Now, the most common target for wave 3 would be the 2.61, between the 2.61 and 2.22. So yeah, my target for the top of wave 3 would be 0.032, between 0.032 and 0.036. Now, again, I like confluence. So I would see if 3.2 would be actually more common here because our main resistance area is found here at around 3. So yeah, I could see maybe like a slight fake out followed by a move down. Now, let's go back to the channeling thing. So assume that wave 2 ended right here, right? Again, we don't know if this is correct, but could be. Now, we draw a channel connecting the bottom of waves 1 and 2. The price is still, so as long as the price doesn't break down below this line here, I would expect the price to continue moving higher. And the highs would, I assume, would be somewhere here. Now, again, extend this right line here. Now, I would expect wave 4 to fall down somewhere here. Now, again, this depends on how long wave 3 takes and how long wave 4 takes, because obviously if it takes shorter, it can be somewhere here. If it takes longer, it can be somewhere here. But you get the point of the channel, right? So if the price breaks out from this channel here, two things. If the price breaks down from the channel, wave 2 is likely not in. So if the price breaks down from here, then I assume the bottom of wave 2 is not in. But if the price breaks out, then it's probably the beginning of an impulse. Now, I'm looking to actively trade ZIL. I'm trying to find a good entry point, which I don't see one yet. But if ZIL goes up like this, then I'd assume it's an impulse. You know, I would try to take profit at the top of wave 3, and then possibly re-enter once wave 4 comes back to like my channel right here. Now this, again, this is called the fourth wave pullback, for those who weren't here from the beginning. Now for entries, I would search lower time frames. But right now there's more weakness. I'll do indicators on some other time, but you can see bearish. It's not a clear divergence, but no, actually it is clearer on lower time frames. So yeah, you can see the price making actually that's a pretty bearish formation when I look at it. So there's a triple top here. 1, 2, 3. Just a sec. Why did I get signed out? Can you still hear me or no?
I can hear you.
Okay, perfect. So yeah, we have a triple top formation here, which is also combined with bearish divergence in both the RSI and the MACD. So yeah, I'm assuming this will go down. Okay, I'll just remove this so the chart is cleaner. I'll go to the premium group and ask for questions. Okay. Again, another sneak peek of the group. So similar articles, several coins which could move upwards. So there's Pearl, there's Voyager, which actually has broken out from a descending resistance line. Uni could be a good buy if it goes above this 4-hour Ichimoku cloud. Now, where's my most recent? Okay, so yeah, this is on Bitcoin. Like, this is from yesterday. I think I also shared it in the regular group. So it's the first bearish divergence, the first weakness the price has shown. So there's a shooting star candlestick here. It is combined with bearish divergence in both the RSI and the MACD. And I would expect the price to go down from here, even though it hasn't actually yet clearly gone down. Like, the divergence is still present. Yeah, but in any case, the stop would have to be placed right here, right at the top of this possible wave 3. I had it something like this, but I'm not entirely sure that this will transpire. Now, again, one more thing. I don't think we have any questions, so I'll just continue for a little more with the webinar. Now, triangles. Whenever you see a triangle, now a triangle cannot be a wave 2, cannot be a wave 3, obviously, because it's an impulse. So it has to be a corrective structure, but it only has to be a wave P or 4. It can also be a wave X, but I'm not actually, we aren't currently trading, currently doing more complex corrective structures. So we'll just stick to ABCs for now. So in the possibility that this is a triangle, say that this could be a triangle A, B, C, like that. A, B, C, D, E. Now, obviously, there are several rules for triangles. But so wave A is the lowest, wave B is, C cannot break the bottom of wave A, E cannot. And D. Zero means the beginning of A, and D. So yeah, say that we get this type of correction. I actually think it's likely right now because it's transpiring this way. So again, I said triangles can only be wave B or wave 4. So in our case, it's not a B, but why I'm saying that it can be likely, let's just change. So yeah, we have a 1 here. Now, this can easily be wave 4, right? The only thing which doesn't make a lot of sense to me is just how small it is, you know, so it has to be something like this. But again, wave 4s can often be very shallow. So it is possible it's triangle, I'm just not sure it is. The other possibility would be that okay, this move down was wave A, right? And then the triangle is the B wave inside an ABC correction. So it would go something like this: A, B, C, D, E. So the triangle would be the B wave right here. So yeah, the triangle is in red. It could possibly be the B wave, which is in black, and then we would have a C wave. So yeah, when you see the triangle, again, keep in mind that it can only be a B wave or a 4 wave, or it's not a triangle and you just not drawing it properly. So I think this is more possible than the entire triangle being a wave 4. So I think it's more likely that the triangle is just the B wave of an ABC correction rather than it being a 4 wave. Just because if it's the 4 wave, then the 4 wave would be extremely shallow. I think someone wrote something in the group. Just let me check. Nope. Okay, guys, I think this is about it for today. Unless you guys have any questions or something, you can go ahead and ask in the Zoom chat. No? Okay then, guys, thanks for participating. If you liked it, you can tell other people in the group so we can have more participants next time. But well, someone chat. Okay, perfect. Okay, guys, again, thanks for participating, and see you next week. I'll make the announcement about the time and topic for the next webinar. Thanks, guys. Bye.